Hello, friends. There is no federal rule that makes 5 household bills automatically disappear the day someone turns 65, but there are 5 very real programs and exemptions that can reduce, and in some cases completely eliminate, major expenses that millions of older Americans see every month. And in 2026, one of those bills alone is more than $200 every single month. The problem is that most of these benefits are not based on age alone. They can depend on income, savings, where someone lives, and whether an application was actually filed. So a person can qualify for help and continue paying simply because the program was never checked. Before we get into the 5 bills, if staying ahead of Social Security, Medicare, tax relief, and government program changes matters to you, subscribe to Dark Macro by Walter Berron. The rules and dollar limits change, sometimes every year, and this channel follows those changes so older Americans can see what the agencies are actually saying. Let's start with Bill number 1, the Medicare Part B premium. For most people enrolled in Medicare Part B, the standard premium in 2026 is $202.90 per month. That works out to more than $2,400 over a full year. But Medicare has something called Medicare Savings Programs, and several of these programs can have the state pay that Part B premium for qualifying beneficiaries. The 3 programs most retirees will hear about are KMB, SEMBE, and KEY. For 2026, Medicare lists the federal monthly income limit for an individual at $1,350 for KMB, $1,616 for SLIM, and $1,816 for KEY. For a married couple, the corresponding limits are $1,824, $2,184, and $2,455. The standard resource limit for those 3 programs is $9,950 for one person and $14,910 for a married couple. And this part matters. Medicare specifically says some states allow people to qualify at income or resource levels above those federal numbers because states can use different counting rules. So seeing an income slightly above one of those numbers does not automatically settle the question. The concrete next step comes directly from Medicare Savings Program applications go through the state. Medicare.gov has the Medicare Savings Programs page and links to state contacts. Medicare can also be reached at 1-800-MEDICARE, which is 1-800-633-4227. Bill number 2 is closely related, but potentially even more expensive: Medicare deductibles, coinsurance, and copayments. This is where the Qualified Medicare Beneficiary Program, QMB, becomes especially important. QMD does more than help with the monthly premium. Medicare says it can pay part of premiums when applicable, Part B premiums, and Medicare-covered deductibles, coinsurance, and copayments. And there is an unusually strong protection attached to this program. If a person is enrolled in QMB-PA, Medicare providers are not allowed to bill that person for Medicare-covered deductibles, coinsurance, or copayments. A small Medicaid copayment may still apply in certain situations, but providers cannot simply send the normal Medicare cost-sharing bill and demand payment from a QMB beneficiary. That distinction can be worth hundreds or even thousands of dollars depending on how much medical care a person uses. Consider the normal 2026 numbers. The Part B deductible is $283. Medicare Part A has a $1,736 hospital deductible for each benefit period. Those are real amounts that can hit a retirement budget hard. For someone who already has QMB and receives a bill for Medicare-covered cost sharing, Medicare says the provider generally cannot collect that amount from the beneficiary. The next step here is the same state Medicare Savings Program application. And for someone already enrolled in QMB who believes a provider is billing incorrectly, Medicare lists 1-800-MEDICARE as a contact point. Bill number 3 is the Medicare Part D prescription drug premium and deductible. This is a separate program called Extra Help, sometimes called the low-income subsidy. In 2026, Medicare says an individual may qualify in most cases with annual income below $23,940 and resources below $18,090. For a married couple, the limits are $32,460 in income and $36,100 in resources. Different rules can apply in Alaska and Hawaii, and certain circumstances can also affect how income is counted. Now listen to what the benefit can do. Under Extra Help in 2026, Medicare lists the plan premium as $0 and the plan deductible as $0 for qualifying coverage. At participating pharmacies, the maximum listed copay is $5.10 for a generic covered drug and $12.65 for a brand name covered drug. After total drug costs counted by the program reach $2,100, covered prescription costs can fall to $0 for the remainder of the applicable period. Some people do not even have to file a separate Extra Help application. Medicare says people with full Medicaid, people receiving help through a Medicare Savings Program, and people receiving supplemental security income can qualify automatically. For everyone else, Social Security handles extra help applications. The official website is sat.gov extra help. Social Security also lists 1-800-72-12-13 for people who want to make an appointment to apply for Part D extra help. So that is 3 different bills already. The Part B premium, Medicare medical cost sharing, and Part D prescription drug costs. Bill number 4 is the property tax bill. This is where the rules stop being national. There is no nationwide federal senior property tax exemption that automatically eliminates property taxes at age 65. Property tax relief is controlled mainly by states and local governments, and the difference from one state to another can be enormous. Texas gives us a very clear 2026 example. The Texas Comptroller says a homeowner aged 65 or older who owns the property and uses it as a principal residence can qualify for an additional residence homestead exemption. Following changes approved by Texas voters in November 2025, school districts provide an additional $60,000 exemption for qualifying homeowners aged 65 or older or disabled on top of the general school district homestead exemption. That does not mean a $60,000 check arrives in the mail. It means $60,000 of qualifying homestead value is removed from the amount subject to that school property tax. Other states use entirely different systems. Pennsylvania, for example, operates a property tax rent rebate program rather than a blanket exemption. For applications covering property taxes or rent paid in 2025, eligible Pennsylvanians aged 65 or older can receive a standard rebate ranging from $380 to $1,000 depending on income, with the 2026 income ceiling listed at $48,110. Certain qualifying homeowners can receive supplemental rebates that bring total relief as high as $1,500. The state extended the 2026 application deadline to December 31st, 2026. So the key message here is not that every senior is exempt from property taxes. That would be false. The real rule is that age-based exemptions, assessment reductions, tax freezes, deferrals, and rebate programs exist across the country, but they are state and local. The practical next step is the local county assessor, appraisal district, or state department of revenue. In Texas, the controller identifies Form 5114, the application for residence homestead exemption. In Pennsylvania, the official program is at PA-Gov-Tachur, and the Department of Revenue lists 1-888-222-9190 for the property tax rent rebate program. And now bill number 5, the phone or internet bill. This one is not a senior-only benefit. It is an income and program-based federal benefit called Lifeline. In 2026, Lifeline provides eligible households with up to $9.25 per month toward qualifying broadband or bundled phone and internet service. Voice-only support remains available at up to $5.25 per month. For eligible households on qualifying tribal lands, support can reach $34.25 per month. For a very low-cost service plan, that discount may cover a large share of the monthly bill. For a more expensive plan, it is a discount rather than a full exemption. Eligibility can come through household income at or below 135% of the federal poverty guidelines or participation in qualifying programs such as SNAP, Medicaid, Supplemental Security Income, Federal Public Housing Assistance, or the Veterans and Survivors Pension Benefit. For 2026, the Lifeline income threshold for a one-person household in the 48 contiguous states, Washington, D.C., and the territories is $21,546 per year. For 2 people, it is $29,214. Only one Lifeline benefit is generally allowed per household. The official consumer application system is available through lifelinesupport.org. The federal administrator, USAC, explains that applicants go through the Lifeline National Verifier in most states and then enroll with a participating provider. Now let's put all 5 together because several of these programs overlap. Number 1 was the Medicare Part B premium. Medicare Savings Programs can have a state pay at $202.90 monthly premium for qualifying people in 2026. Number 2 was Medicare deductibles, coinsurance, and copayments. Under KeyMB PPA, qualifying Medicare cost sharing is protected, and providers generally cannot bill the beneficiary for those Medicare-covered amounts. Number 3 was Part D prescription drug costs. Extra Help can bring a qualifying plan premium and deductible down to 0 and sharply limit covered prescription copays. Number 4 was property taxes. There is no national senior exemption, but state and local exemptions, assessment reductions, freezes, and rebate programs can produce significant relief. Texas and Pennsylvania are 2 current examples, but every state has its own rules. And number 5 was phone or internet service. Lifeline can provide a monthly federal discount for households that meet income or program requirements. There is one pattern connecting almost everything we covered today. Turning 65 by itself usually does not activate these benefits. Eligibility has to be established under the rules of the individual program. In some cases, enrollment is automatic. In others, an application has to be filed. And in state and local programs, two retirees with the same income can face completely different rules simply because they live on opposite sides of a state line. That is why the most reliable source is always the agency administering the program. Medicare for Medicare rules, Social Security for Extra Help applications, the State Medicaid Office for Medicare Savings Programs, USAC for Lifeline, and the appropriate state or local tax authority for property tax relief. And one final safeguard before we close. Everything reported here is general educational information about public programs and laws. It is not personalized financial, legal, tax, or medical advice. Eligibility can depend on facts that are different for every household, so specific details are best confirmed directly with the relevant government agency. If this kind of reporting helps make complicated retirement rules easier to follow, subscribe to Dark Macro by Walter Berron, and share this with someone on Medicare or Social Security, because one program they have never checked could be connected to a bill they are still paying today.